All right, here we go. It is market update time. I told you I'll be back on Wednesday. I told you that, and here I am. So if you're watching this as I go through everything, if you're watching this on social media, know that if you go in the description, there's a link in there. You can check out all the things I'm talking about in case you're not lost and wondering what the heck am I pointing to with all this, okay? So here we go. Market update time, a lot going on. So what's been happening with the markets? Well, we saw a big shift, well, not a big shift, but pretty significant increase in rates last week. And then kind of things have settled back down again. And now they've come back down a little bit. So we're in the mid sixes again, maybe hoping to move down a little bit more, but we're going to see what happens. But definitely a change there with all that was going on last week with the market and tariffs and everything else. And that's kind of still continuing a little bit this week. It's going to be going on for a little while. So it is going to be a little bit of a bumpy ride coming through. And then guess what? The Fed came out today and jumped in and had to talk a little bit. And a couple months ago, they were doing that whole transitory crap, pardon my language, talking about inflation and whatever else that was. And now they're kind of backing off on that a little bit and saying, hey, maybe this isn't what we want. This is going to be a little stressful, on the economy. What's going to happen? And so they're kind of pumping the brakes on any kind of, can we do something with the rates or not? And will that help the market or will it hurt, the economy overall? So now we're kind of in this point to where we're not sure what the Fed's going to do. We're not sure what the federal government's going to do, and we're not sure what the market's going to do. But we are having, so-called experts on both sides come out and just, hey, here comes the crash again. And I just want to remind everybody that North Orange County is different than Orange County, and Orange County is different than nationally. Because I was just talking to an agent in Arizona where we have some investment properties. He's in the Phoenix area. He's like, we got like 27,000 units for sale right now in the Phoenix area. And I'm like, okay, well, that's a lot. He goes, yeah, but we think our market's kind of bottomed out here and we're starting to kind of get busy again because it's springtime. This is what happens this time of year. Orange County, conversely, we have like 2,700 homes for sale, active homes for sale. So much different market for sure. We are seeing some price drops. Probably about a third of the homes for sale are seeing price drops, but that doesn't necessarily mean in every single category. So because if you go overall Orange County, there are definitely, you go down towards the ocean and that type of stuff, a lot more luxury properties where you are going to see some negotiation, some price dropping, different than coming inland a little bit into North Orange County. So it's much different. But we are looking at those rates and keeping an eye on those because we are seeing supply come up a little bit and maybe not get outstripped as quick as we would usually see. And if that continues to happen, you will see prices level off. You will see sellers have to be more competitive or more strategic, really, with how they're pricing their properties because they don't want to be part of a price drop because at the end of the day, when you start dropping your price, you're going to end up netting less. So you want to make sure that you're going out on the market at the right price to gain ground, not to lose ground. Okay, so look at those things. Look at the numbers down below. You can check out those couple of cities that I have listed, those 6 cities or so. If those aren't one near you, let me know. I can get you that information. The rates are down there as well. The MAI is ticking back up a little bit here in Fullerton, North Orange County area. In other areas, we know that might be dropping a little bit. I put a new graphic down below for you there. It just talks about what we just said with the sellers, that accurate pricing is crucial right now because we are seeing, demand drop a little bit. And overall, North Orange County, like I said before, we are seeing that inventory rise a little bit. So one of the stats they talked about, I think they were saying that in March that the average sale price was like 98.6% of the list price. So that's a good sign that we are still very close to that original list price. So people aren't overpricing their homes right now too much. So that we want that trend to continue where we're kind of staying in that baseline, even gaining some ground on the seller side. For buyers, though, we are seeing more stuff come to the market. We are seeing more inventory. So that's definitely a good sign. I'm showing homes this afternoon. We're seeing things come up. We are seeing things get peeled off, just not quite as fast. There may be some opportunity there, but every time a buyer calls me and says, is this a good time to buy? The same thing. And I hate using the phrase, date the rate, marry the house, but if it's in your budget, it's always good to grab something and start building equity, especially in this market where I'm at. the market, even if it goes like this, it'll eventually go like this, and kind of, it usually doesn't do that. I haven't seen that. Not in a long time. So we are still a steady growth there. So maybe not going up 10% a year, but maybe going up 4 or 5% a year. We'll have to see at the end of this year what the numbers look like, but we're still seeing growth here in the North Orange County area. Okay, so again, all the numbers down below for you. I hope you got through this video. I know it went a little long today, but I want to explain to you that there are some changes happening, definitely reflected in what's going on with, the Fed and the Treasury, the notes and the bond market and all that type of stuff. And so we have seen a little bit of craziness, but, adjusting up 0.5%, down 0.5%, we're kind of still right in that 6.5%, 6 to 6.5% where we want to be. So reach out to me, of course, any questions you might have. I kind of babbled on a little bit, but I want to make sure I got this out to you guys before I go out and show homes today. But anything you need, I'm here to help. Agent B, like I always say, here to help when you're ready. I'll see ya.